Hello everyone. Welcome back to my YouTube channel. So in today's video, I'll be going through one of the most important aspects of smart money trading. So that will be liquidity and liquidity sweep, and on how you can capitalize on taking trades or anticipating on taking trades using the concept. So let's get down to it. Now, on this example, as you may see, we have a drop and some sort of a pennant pattern. So there's a retail pennant pattern. It's a bearish example. Okay, so and as you know, when we have this type of patterns, they mostly generate a high amount of liquidity. Okay, so as you can see, we have this resistance trend line and we have this support trend line. So what usually happens is when price comes back into this resistance, we will have sellers selling the market. And again, when it comes back to that and touches that resistance trend line, they'll sell again. Now, as we see this pattern forming, and again, we will see this bias as price comes back to the support trend line. So as they buy, they'll be putting the stop losses below. Hence, this type of patterns create a high amount of liquidity. Okay, so even when they are selling here, their stop losses will just be above. So what we need to look for as smart money traders is to look for liquidity sweep and anticipate that price will liquidate all these stop losses that we see above this resistance trend line. Okay, so as you may see, we have sell side liquidity and buy side liquidity. So, and as you may all know, that when you're trading this type of patterns, you need to wait for a break of structure and some sort of retest before you can enter. So that's how most retail traders confirm their entries, or that's how they enter the market using these retail methods. Okay, so and as you all may see, price goes to the downside with an impulsive move, and it starts creating some sort of lower lows and lower highs. So we have this lower low, lower high, we have this lower low right here, and we have this lower high, and now price creates a new lower low. Now price pushes to the upside and it breaks this lower high, which gave us this break of structure to the upside, meaning that the market is about to change direction. And again, as price breaks structure, it created this equal highs, and eventually it dropped to the downside, went back to a supply zone just below. Okay, so as price enters a demand zone, it started moving to the upside to seek the buy side liquidity, because already the the sell side liquidity was swept. Okay, so now all we need to do is wait for price to sweep all this buy side liquidity, and then we can anticipate on how price is gonna, or where price is gonna go, depending on how price is delivered going into that buy side liquidity zone. Okay, and so as you may see, we have this strong momentum to the upside, and we have this high and high low. We have this high and high low, and our price taps into that liquidity area, this buy side liquidity, and it wicks just above, and eventually it drops. Now, as it drops, we have this high low, which was taken out. So we have this break of structure, which is a change of character. And now, as price moved to the downside, it left a supply zone. So now we will take that supply zone and market. So that's where we'll be taking our trades moving forward. Okay, so let me give you a ray chart example on GBPUSD. So as I was explaining, that we have this pennant pattern. So we have a breakout, and a retest. And now we have people selling from here, obviously. So we have this sell side liquidity, which was scrapped. And as you see, price is creating high, lower lows and lower highs. Lower low, and we have this lower high, and we have a new lower low. Now price moves to the upside and it breaks structure. As you may see, that price closed above this lower high, and we have equal highs right here, which means that we have liquidity above. And so price returns to this demand zone right here, and it just tapped in and it played very nicely. And now what we have to do is wait for price to take out the buy side liquidity and see where price will go from there. Okay, so again, we can identify that price is moving into our area of liquidity. So look at the price delivery going into that zone. It is creating higher highs and higher lows. Okay, so we have this high and we have a higher low. Now price breaks above, it creates a new higher high, and we have a new higher low. Okay, so price goes to the upside and it creates this new higher high, and that new higher high, it is the one that swept this buy side liquidity just above this high, right? And after that buy side liquidity was swept, we have a strong move to the downside, which broke structure and gave us this change of character. Now what we should be looking for right now, we look for a supply zone of which we'll be selling from. Okay, so we clearly have a supply zone right on this candle, on this huge candle. So obviously, obviously this is a big candle. We have to refine it on a smaller time frame. So I'm going to drop down to M15 to refine that order block or that supply zone. So can obviously refine it to this candle right here. And my entry would have been at this wick, and obviously my stop loss would be just above that. And our target, this lows right here. So that would have been a massive 6.5 R. Okay, so that is how you basically trade buy side liquidity, sell side liquidity, and all that. So you need to have liquidity sweep, you need to have a break of structure, and you need to have a clear price delivery into your high liquidity areas. Okay, so even when you are trading supply and demand, if price is delivered into your zones in a clear way, that's where you can anticipate that price will play out, and it will give you some sort of confirmations before any sudden big movements. Okay, so that will be it for this video. And if you need more videos like this one, just make sure that you subscribe and leave your comments.